Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Boris Ivanov, founder of Emiral Resources Ltd, to discuss if weakening Chinese demand will continue to weigh on the commodities space. Boris, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill.
What are the key challenges and opportunities for mining and metals post-COVID?
Well, definitely COVID changed the whole pattern of things business is done. All over the world, in mining industry in particular, and that also concerns the companies which have international footprint. First and foremost, it became very challenging to move people around with travel restrictions, to get guys on the ground, in the desert, in the jungle, to do actual geology or to maintain your production, since Emiral Resources have a couple of sites where we really produce, became really painful and actually extremely expensive. So this is the most challenging thing, speaking about COVID. And this will, well, you cannot do geology by Zoom. You must have people on the ground, 100%. And well, in fact, we witnessed kind of a gap here in geology in 2021 when mining companies, junior mining companies, mid-cap companies dramatically reduced the effort to find new deposits, new resources, and that will impact the prices in the near future. I think this is the key thing. And of course, there are a lot of bottlenecks. At some point in time, it was even challenging for us to take the product, the gold, from where we produce to the gold trading centers in Europe, in Dubai, in New York, because nobody flew back in March, April 2020.
Right. Well, and of course, Chinese demand impacts everything from the supply chain to manufacturing, of course, precious metals. Will weakening Chinese demand continue to weigh on commodities?
I don't share the gloomy perspective for Chinese economy. Of course, yeah, COVID affected everybody, and China is not an exception. Yeah, but in real life, what we see is sometimes even increasing demand. It's on the same levels in terms of construction, in terms of iron ore, manganese, basic metals. And China, I think, will continue to generate quite a healthy demand for those metals. And let's face it, there is a lot of criticism of China, but still China is the one of the leading, well, green metal economy country, using nickel, cobalt, copper, aluminum for their electric powered cars. And again, Central Bank of China is one of the largest buyers, consumers of physical gold on the market. That all actually make me believe that Chinese factor will be, if not positive, but at least neutral in terms of the demand on the mining market.
Where do you see the strongest investment opportunities for company growth right now?
Mining is getting greener, 100%, yeah. And greener means more metals that were kind of on the periphery of the producing companies are being put into business. I'm talking about cobalt, rare earth, I'm talking about copper, aluminum, and all that actually creates a huge opportunity, investment opportunity for those people who know the market, who know where those opportunities are, who are able to identify those opportunities and take advantage of the deposits I was just talking about. Also, it's extremely important that, well, we see the pattern of consolidation on the mining markets, yeah? And this pattern includes, well, junior companies, sometimes we call it national champions, companies that are being set up by people in African countries, local guys with the money, who sometimes have very good geological expertise because they studied abroad, they know the local markets, and identifying those opportunities, those national champions, would create actually quite potential breakthrough for guys like us. Emiral Resources just acquired a substantial share in Bibiani mine in Ghana, which has been set up by those type of people, and this actually makes me believe that we could be, well, those who will be able to do that will be in the driving seat. In terms of geography, I would say that we are talking about Western Africa mainly, and of course, Latin America. It's widely underexplored.
Right, and let's talk about gold here for a moment, Boris. It rallied to more than $2,000 US an ounce in August, fueled by investors looking for a safe haven from the economic fallout of the pandemic. While this was a major boost for the industry, does the rise of Bitcoin represent a threat to the profitability of gold in the future if you think about both assets as a safe haven?
I don't think it's a threat. Yeah, cryptocurrencies are actually a very powerful trend. Yeah, it's not only of interest for the institutional guys. More and more household people, like public at large, are investing into Bitcoin. It's a trend. But again, Jill, Bitcoin is the new kid on the block. 10, 15 years. Yeah, I'm talking about cryptocurrencies, not Bitcoin. Yeah, cryptocurrencies is a new trend. Gold has been with the world economy for centuries. Gold will continue to be the major safe haven metal because it's sustainable. It doesn't have any volatility. Longevity of the cryptocurrencies are still remain to be, how to say, defined. We see gold being the safe haven for economic investments for a long time. If you look, any investor likes the predictable, I would say, pattern of things. Yeah, if you invest in gold, and you've been investing in gold for the past 20, 30 years, the annual return, believe it or not, is between 10 and 12%. So in cryptocurrencies, you can make a lot of money, you can lose almost all of it next week, and that what will, I would say, make it difficult for cryptocurrencies to replace gold in the near future. And let's face it, central banks, regulators, they are conservative. They are much more accustomed to such instruments as physical gold, as gold derivatives. And I think here we are talking, obviously, potentially maybe some convergence between gold and cryptocurrencies. But I believe that, well, in the near future, there will be no, alternative to gold, in terms of the safe haven instrument.
All right, Boris, and to wrap up here in the last minute, where do you see the biggest drivers of innovation in mining coming from?
Well, mining is a very conservative business, and I would say that there will be no magic wand. There will be no major breakthroughs in the, I would say, next decade, but there will be gradual incremental increase of the efficiency of the technologies we're using right now. Yeah, I'm talking about maybe some new drilling techniques, maybe some new equipment patterns, but definitely the future of innovations as far as the gold mining and mining in general is concerned is the ability of the artificial intelligence to be applied to analyze the patterns, the massive data that we have doing geology on the ground, using the mobile labs, which are very expensive now, to actually try to analyze samples on the ground and not ship it and wait 4 to 6 months when the results are coming back. Drone technologies are extremely important because that will decrease the budget, cut it, allowing geophysics to be done with the help of drones, I would say, in a very economic fashion. Maybe in the future we'll see some, I would say in 10 years or so, the ability of drones to maybe even carry certain equipment or certain samples from here to there. Of course, this is very, very important, but these are incremental changes. The sustainable part of innovations will lie with the ability to curb the use of mercury, which is deadly, which is a huge problem for a lot of African countries. There are a lot of ideas how to do that, but I think the major one, what we do at Emiral Resources, is to engage local mining guys, allow them to use our production facilities to extract gold and to integrate them into the industrial production.
All right, Boris, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
My pleasure. Thank you so much.